Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 15th of May 2026. The first chart is the US Dollar Index Futures, which, kind of as expected, moved higher this week and up to the highs of the range where the next level above begins. Price moved higher on about average volume, as it has done for the past 5 weeks. There was very little, if any, testing for supply below the previous bar's close. This was a push higher for most of the week, with the market closing at a fairly logical level, the highs of the range or the lows of the range above. And this move higher did put a number of the associated markets under some pressure, as you'll see as we move along. E-mini S&P 500 index futures, and they did attempt to move higher initially this week, but did encounter some supply. That supply forced a mid-bar close, and volume was just slightly reduced, but about the average. So it was genuine trading. The narrowing of the spread as price attempted to push higher was your first telltale sign that some supply was being drawn out. The most likely response here is a pullback to test the market for supply. There is some chance this is a absorption bar of some form, although it's possibly less likely. More likely is some supply has been drawn out, the market will pull back in response to test the market for supply, and then it will respond depending on how much supply is actually drawn out. This is US Treasury 10-year note futures, and they have pushed lower this week and down to the lows of the range. This is the lows of the big broader range we have here, which we've been following for a long time now. Price closed below this bar's low, and it's pushed out of this period of consolidation sideways, which we've seen for a long time. The market's now threatening to break down and break below the lows of this big broad range. Volume was increased, but remained a little below the average. That's showing you that demand was very low this week, and price was forced to really stretch lower in order to find enough buyers to satisfy the sellers. So you've got the market threatening to break down now. I do expect the market will attempt to hold on to this level here. A clean breakthrough this level and failure to show an ability to recover would see this market actually break down. So now the watch is on. This is getting serious now. We'll see what happens in response. Copper price futures. Copper price futures made a big charge earlier in the week and appeared to be breaking out. But the market did encounter supply again at this level. You'll note back here, the market attempted to break out and supply was drawn out. That's happened again this week. The market was pushed back down and below the highs of the range. This week, the market was pushed back down and it's closed pretty much adjacent to the previous bar, which remains above the highs of the range. The other thing to note here is how much supply was drawn out when the market attempted to break out last time and how much supply was drawn out this time. That suggests that the resistance is weakening. The market's certainly showing you intent. It does appear to want to move higher. You've had the breakout here. Supply was obviously drawn out. It pulled back in response to consolidate. There was a little reversal here, a shakeout over multiple bars, a push back up to the highs of the range, little period of consolidation, and now an attempt to break out again. I expect the market will pull back in a similar fashion to what it did last time, an attempt to consolidate prior to a third attempt to break out. The depth and duration of any pullback in response to this week's trading will be an indication of how strong the resistance is above. Obviously, a deeper pullback where the market takes a longer time to recover suggests that the resistance is strong, whereas a short and shallow pullback and recovery would suggest that the resistance is weakening and the demand is stronger. Gold price futures. Gold price futures pulled back this week within the range of the previous bar as an inside bar and back to the lows of the range here. You've got the resistance above up here. Highs of the range are there. And prices pulled back. And you've got 3 bars now pretty much trading within each bar's range. This market's reluctant to move lower and it's consolidating sideways right at the lows of the range. The market's had the opportunity to break down twice now on this bar and this week's bar, and it hasn't done so. It's found sufficient buying support to maintain price at the lows of the range. Watch to see if the market again defends the lows of the range and price just pops up a little bit. Silver price futures. Silver price futures made an attempt to break higher this week, but did encounter some increased supply. It wasn't overwhelming supply, as volume remains below the average. It was increased, but it remained below the average. But the attempt to break out was thwarted by supply being drawn out and price was pushed back down to close adjacent to where the market's been consolidating previously in there. I expect the market will come back, test the lows of the range for strength while it goes through some testing for supply. And if supply is found to be low, there'll be a secondary attempt to push up, probably to the highs of the range prior to any serious attempt to break out. This is light crude price futures, energy, and the market continues to oscillate around these June 22 highs. It pulled back last week and closed just below that level. It's recovered this week to close just back above that level. And note there was no testing for supply below the previous bar's close this week. Price just pushed higher. Volume, however, reduced considerably, so demand wasn't particularly strong. It was selling pressure that was weak this week, and price effectively floated higher on a lack of selling pressure. I still expect this equilibrium level around the 95 is where the market wants to sit, around that level or just fractionally below, where all these clustering of closes have taken place between the 90 and 95 levels. Into the currencies now. This is the Euro-US dollar currency pair. And with the strength in the US dollar, this market pulled back this week. It's closed below the previous bars and it's been left hanging to some degree. This was the logical level to come to here or to here. The market's closed between those two levels. That generally means the market's either got further to fall or it's overshot its level and it's going to recover slightly. It's a bit difficult to tell. Volume was reduced and below the average, so it may have overshot its levels as it was seeking sufficient buyers to satisfy the sellers. We'll have a look at the pound and see if we get a hint there. The pound had been a little stronger than the euro, but this market traded well below the previous bars and was weaker than the euro. It's also been left hanging to a fair degree between the two levels. So it's either got further to go or it's overshot its levels and it's going to attempt to recover. Volume in this market was increased and slightly above the average, where the euro was slightly below the average. So this market was hit pretty hard and below the period of consolidation above the sideways trading. This market looks more like it wants to continue lower, whereas the euro looks like it will attempt to recover. So you've got a contradiction there between the two. Have a look at the yen. And the yen's closed at the logical level here at the lows of the range. It's not been left hanging. Volume reduced considerably in this market, similar to the euro. So this market didn't encounter overwhelming supply either. Have a look at the Aussie dollar. The Aussie dollar closed lower this week, but it remained within the range of the previous bar, whereas the euro and the pound closed well below the previous bar's low. And this market's also remained within this little period of consolidation, fairly comfortably really. It is left hanging to some degree between the two levels, and volume was reduced and below the average in this market as well, which does suggest this market would probably attempt to move higher and back up to this level. So there is some contradiction between some of these currency markets, at least this week. We'll see how it resolves next week. Bitcoin futures. Bitcoin futures traded as an inside bar this week within the range of the previous bar. Volume increased to the average. This was the market attempting to absorb the supply drawn out from this level here where the market gapped lower previously. We've expected some supply to be in this zone, and the market's making a decent attempt to absorb or buy that supply, which would, if successful, allow this market to push higher. I do expect from this level the market will encounter increased supply, so it's going to take some effort to get through there. It's making a pretty good job, at least so far, to absorb the supply from where the market gapped down previously. So that was a pretty good effort. In response to a bar like that, you'll often see a brief and shallow test for supply below the previous bar's close, and if supply is found to be low, an attempt to respond higher, probably up to the highs of this range or the lows of the range above, which is the same level here. So it appears the market's made a pretty clear effort to absorb the supply within the zone where this gap lower occurred back in February. That's a pretty good effort. Back to the US dollar index futures just quickly. You can see the market's pushed up to the highs of the range, kind of as we expected. It was actually a little stronger than I expected. I thought it would close perhaps within this range here. It's closed slightly above it on average volume. I expect in response to that, the market will pull back initially to test for supply early in the week and then respond depending on how much supply is drawn out. I expect the market will continue trading in this zone here, despite the fact it's showing that it would like to go higher, or it has done over those previous couple of bars. When the market did move up to this level, volumes increased and price pulled back. So I'm thinking the market will probably pull back into this zone here and perhaps trade sideways in consolidation mode, at least for next week. Okay, thanks for your time. Back again next week. See ya.